Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of corporate filings to find the real story behind the headlines, and today we're looking at N2OFF Inc. And it seems like they've got some interesting financial maneuvers happening. Before we dive in, if you like getting these clear breakdowns, make sure you're subscribed and join our Discord community for more insights and discussions. It's linked in the description below. So what's the big news with N2OFF Inc.? Well, they've just filed the current report, basically an 8K, and it's all about a significant amendment to a previous agreement. Think of it like updating a contract to make new arrangements about money and shares. The company N2OFF Inc., a Nevada corporation, has amended a purchase agreement they initially made back in May. This agreement is with an investor called YA2PN Limited, and it's all about how the company can get money through what's called a Standby Equity Purchase Agreement, or CPA. Basically, this investor had committed to lend N2OFF up to $3 million, but here's where it gets a bit complex, and we need to simplify it. The money wasn't just handed over, it was planned to be made available in two stages. The first $1,500,000 could be requested by N2OFF within 60 days after they filed a new registration statement with the SEC. A registration statement is like a detailed public announcement about securities, in this case, shares they plan to issue. Then another $1,500,000 could be requested within 60 days after that registration statement officially became effective. Effective means the SEC has reviewed it and given its approval for the company to proceed with issuing those shares. Each time the company requested money, it would be documented with a promissory note, which is essentially an IUU. Now, this recent amendment changes things. What did they change? Well, the company is now issuing an additional 574,425 shares of its common stock, or what are called pre-funded warrants, which are like a promise to issue shares later to this investor. This is happening within 3 business days of signing the amendment. They also agreed to revise those promissory notes. Think of this as renegotiating the loan terms. The amendment means the extended payment terms and some other changes are now in effect for those notes. Now, why is this whole thing being reported? It falls under a section that deals with selling shares that aren't registered with the SEC. This means that the additional shares they are issuing, these 574,202 of the Securities Act, is typically for private transactions not involving a public offering. So they're issuing these shares directly to the investor without having to go through the full public registration process. This exemption, called Section 4(2) of the Securities Act, is typically for private transactions not involving a public offering. So they're issuing these shares directly to the investor without having to go through the full public registration process. And the exhibits they've filed with this report are pretty important. They've included the actual amendment to the purchase agreement. This is the core document detailing all the new terms. They also filed Exhibit 104, which is the cover page interactive data file, important for how financial information is processed digitally. The report is signed by David Palak, the Chief Executive Officer, on July 28th, just a few days after the amendment was made. Now let's put on our Warren Buffett hat and see what this tells us. What's the real story here? N2OFF is clearly in a situation where they need to raise capital, and they're using this standby equity agreement. The amendment suggests that the original agreement wasn't working out perfectly, or they needed to adjust the terms. Issuing additional shares, even if pre-funded warrants, dilutes the ownership of existing shareholders. Dilution means that each existing share represents a smaller piece of the company. When a company needs to issue more shares to get funding, especially through these types of agreements, it can be a signal that they are struggling to secure traditional financing or that their equity is not highly valued in the market. The fact that they are renegotiating terms and issuing more shares to the investor indicates a need for continued financial support. We don't have specific financial tables in this particular filing, which is a bit of a miss for a deep dive. However, the actions described tell us a lot. First, the company's reliance on this type of financing. These standby equity facilities are often used by smaller or growth stage companies that might find it difficult to get loans from banks or raise money through public offerings. At terms they find favorable, the amendment itself is a sign of flexibility, but also potentially of pressure. They are revising promissory notes, which could mean less favorable payment schedules for the company or a higher effective cost of capital than originally planned. What's the consequence for investors? For current shareholders, it means their stake in the company is getting smaller. If the company doesn't grow significantly and profitably, this dilution can directly impact the share price and their overall investment value. From a business strategy perspective, it shows they are prioritizing securing funds to continue operations or pursue growth initiatives, even at the cost of dilution. A key risk here is the company's ability to generate enough revenue and profit to eventually repay debts and make these equity issuances worthwhile for shareholders. We need to watch if N2OFF can actually make good use of this funding to grow the business substantially. If not, the dilution could be a significant net negative. In essence, N2OFF is actively managing its financing needs, but the methods used point towards a company that's navigating a challenging funding environment. The key takeaway is the ongoing provision of capital through share issuance, a common but often dilutive method for companies seeking to fuel their growth or keep operations running. Now, looking at these results more broadly, what's the overall picture? N2OFF seems to be in a phase where securing liquidity is paramount. The agreement with YA2PN Limited is their lifeline for capital. The need for an amendment suggests that either the market conditions changed or their own business performance led to a need for modified terms on this funding. The company is choosing to issue more stock and adjust debt repayment terms rather than face potential cash flow issues. This strategy is a double-edged sword. It keeps the lights on and allows for continued operations or investment, but it comes at a direct cost to existing shareholders through dilution. The company's direction seems to be focused on survival and potential growth, funded by an investor who is willing to provide capital in exchange for equity. The main risk for N2OFF is the sustainability of this funding approach. If the company cannot achieve profitable growth quickly enough, they might find themselves increasingly diluted and potentially in a weaker negotiating position with lenders and future investors. On the other hand, the opportunity lies in successfully deploying this capital to achieve significant milestones that would justify the dilution and increase the company's overall value. My take on this, N2OFF is clearly in a growth or turnaround phase that requires external funding. The reliance on equity financing, especially with amendments to terms, signals a company that's actively working to stabilize and grow, but it's doing so with methods that can impact existing shareholder value. The success of their strategy hinges on their ability to convert this funded growth into tangible profits and a stronger market position. We need to see future findings to understand if this funding is translating into profitable growth or just prolonging operations. Alright, that's our breakdown of N2OFF's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.